I want to turn now to our leading auto expert here at Bloomberg, Matt Miller, because this is an industry, Matt, that is on a roll, right? So Chrysler just reported. We're going to hear from Ford and GM, and we've already heard from others. 2015 going to be another big year?
Yeah, I mean, all of auto industry analysts and players are expecting it to be really a banner year, possibly even a record. J.D. Power, along with LMC Automotive, you may know from Jeff Schuster is one of their analysts or their main analysts there. They're expecting sales of 17.4 million cars in 2015. That would be a tie for a record with what we saw in the year 2000 and about 1 million more cars than what we're going to see this year. Actually, people are expecting maybe to see on the top end 16.5 million this year when we close out the December sales. December sales are expected to be really strong. Every year, obviously, December is the biggest month because they offer Christmas deals and, I don't know,
December
Hanukkah.
To remember.
Yeah, incentives. December to remember, exactly, which Lexus made famous. So J.D. Power is expecting 1.5 million. Pretty much everyone's expecting 1.5 million total at the end of this month. That would bring us to 16.5 million car sales. Obviously, consumer confidence has been great. Lending credit has been great. And low gas prices also seem to be a positive, although it could cut both ways.
It could cut both ways. Okay, so Adam Jonas at Morgan Stanley says, look, this may be a year where we're selling a lot more cars, but it's not going to be a great year for auto stocks. Why?
That's right. So he lists a number of reasons in a note that Morgan Stanley put out. Number one is we're just adding so much capacity, and that happens at the top of a cycle. So for the U.S. auto market, for North America, Adam and Morgan Stanley think that we're at the top and we're going to face cyclical issues as far as the stocks go. So a good year for selling cars, not a good year for buying car makers' stocks, because, of course, you're trying to predict future earnings, or you're hoping that they'll grow when you purchase stocks. We're expected to add 150% of the capacity that we lost in the financial crisis back, so way more than we had at the top of the last cycle. Also, the incremental car buyer, the people that are going to push us from 16.5 million sales to 17, 18, 19, 20 million yearly sales, they demand the biggest discounts, right? They're the most price-conscious car buyer. So you don't make a lot more money on those extra car buyers, and that's going to be an issue going forward. And, of course, there are a number of issues as far as what's going on overseas,
what
a
about
slowdown
the
in China.
Recalls, right? I've been surprised at the recalls. 60 million vehicles.
The recalls haven't been so much a problem for unit sales. They have been a problem for the bottom line to an extent, but you can write that off, and that's a one-off charge. Although I expect recalls to continue at a relatively high pace in the future. This is the new normal as far as the auto industry is concerned. Think about it. As a car owner, it's not necessarily a bad thing. When something breaks with your car, normally you have to take it in, you have to get it fixed, you have to fight with the car maker to pay for it. If they're recalling it, they're doing everything themselves. So I want them to recall my car as much as possible.
I want
Absolutely.
a perfect car when it rolls off.
Okay. Your car is going to be much more perfect than it ever has been. So don't worry about that. And one of the interesting things that's going to hurt, especially automakers' bottom line, is currency. You know, the Japanese yen is over 120 right now. That means the Japanese car makers are going to be selling a lot more cars here for cheap. Hopefully German car makers will as well. And we're not going to be able to get as much from the cars that we sell down in South America.
All right, Matt, thank you so much. Matt Miller of Bloomberg Television.